Hi, Eduardo. Nice to see you.
Nice to see you, Ari.
Yeah, so we have completed 1 month of the Guide to 65. It was really good. The first two lessons really introduced us into a lot of new vocabulary. These 5-question quizzes, which is really good, and then the monthly recap, which had 20 questions. I really feel how this is going to flow now. So we just started month 2. There are a few questions that are often coming up, so I think we'll hit those and yeah, let's go. What experience and skills will you gain if you do pass the Series 65? What's that going to do for people?
I think what it's going to do is going to keep people with their feet on the ground because people will understand that the financial markets work in a certain way. They work that way for a very long time, that there is regulation out there, but that people think sometimes is unfair, like the accredited investor thing. But actually, there is a whole of a background to investing that is there to protect investors mainly. So I think what I really learned from Series 65 is that things done in a certain way. There are certainly room for improvement on certain financial products that they can be made more accessible or more understandable. But in the end, the situation we are in now in the financial market, that is like the snapshot that is taken by Series 65 is that each financial product work in a certain way, is regulated in a certain way, mainly to protect investors. So that's what I really like about Series 65. It keeps me grounded, and so I don't end up getting scammed by people, or I don't end up over leveraging myself or buy too many risky financial products.
There's a lot of people, I think, reaching out to you. So not only what are some of the ones that keep repeating, but then if anyone does have a question, tell us how they can reach out to you.
So I guess you're talking about the questions I get at the over Twitter about Series 65, correct?
Correct.
Okay, so I wasn't sure that you meant the questions I get as a registered representative at an IRA, if that was the question you were after. No, but the question I get for the Series 65 that we organized, you and I and Genfinity, are mostly about how I should study. People come to me to say, how should I approach this? Should I take more time reading your material? Should I try to take notes out of the material so that I fix it in my brain? Should I take the texts many times? A lot of people ask, what other resources are available for us out there? So starting from this last question, I think that in terms of the other resources available, our job, so Aries, Genfinity, and my job has really been to try and do that part of the work for you. So we went out there, we looked what is available, we passed the exams, and we put together a concentrate of knowledge that is required to pass the exam. So there is not really the need so much to go out and read other documents or other guides. What is interesting, though, is to Google some of the things you don't understand. And I give you an example with one of the questions that people are asking regarding the yield for bonds. There are 3 or 4 different types of yields that are tested in the exam. And I think because they have a definition, they have a name, what is very important, what is very helpful to learn about them is to copy and paste the name of the yield into Google so that you get the first page. Second page that appears is usually Investopedia or another really good page that can give you a little bit more color about that kind of yield. So that's one of the advices I've been finding myself to give. Maybe check some of these definitions if they're not in the material, but you don't need to go and have another book or another course about Series 65. Everything you need to know is inside the Genfinity guide to Series 65.
There are 3 major bond rating sources. They've got the Moody's, Standard & Poor's, Fitch. Yeah, I was just thinking, this is actually my question. How do they differ and which one should you use?
So when you are a bond person, so if you manage a lot of money and you buy a lot of bonds, the difference between those three agencies are quite significant. Just to make an example, if you are a bond manager that has a $200 billion worth of government bonds, which has what we call risk-free, right? So US Treasury says, oh, they are risk-free. Well, there are some differences between Moody's and S&P on how they treat some of the legal language on how these bonds are issued and who gets paid first in case there is an issue. So if you are a really big fund manager, the differences and the nuances between these three different houses, how they evaluate the bonds, are relevant. For the retail investor or the accredited investor, someone would buy $100,000, $200,000 of bonds or $10,000 of bonds. I think the three agencies are pretty much the same, so you can take the rating of any of the three and compare them. The fact that they have slightly different writing, so 3 capital letters instead of the first capital letter and 2 small letters, that doesn't change much. But what is AAA with Moody's is AAA with Fitch and Standard & Poor's is extremely good quality. What is CCC with one of them, the opposite side, is a risky bond, no matter who rates it down there.
Can I retake these quizzes over and over so I feel 100% confident?
Yeah, you really should do that. You should take them and maybe until you get 100% score, and then you should go back to them just before the exam so that you freshen up that ability to read the question, understand what it's saying, take away the part of the question that is trying to put you on the wrong track and answer the question. So do that. And also remember, if a question is becoming a little bit too hard and it's kind of taxing you too much, just skip that question, go to the next one and leave it to the end. But by all means, keep taking the quizzes. It's the most important skill you need for passing the exam.
This week is equity securities. And so what kind of sector are you seeing is very popular right now for the investors? There's so many different sectors, but what seems to be kind of hot right now?
Well, it's always been last year has been a bit of a battle between, there has been what's called portfolio rotation from tech that was hit very hard by inflation. The reason is that they don't generate a positive cash flow, so people prefer to put money where cash flow come in, and there is a discounted cash flow problem for companies that have their return really far ahead in time, because when you change the interest rate, that amount becomes smaller and smaller. That's why tech goes down. And then there has been more interest in energy, and because that is generating cash flows now, and there has been a lot of demand for energy, and also there is not so many energy assets to go after in the world. And also, but this is the story more of 2022. The story for 2023 has been an extremely interest in everything artificial intelligence, because of what happened with OpenAI, a company that put out an app on the internet called ChatGPT, which I'm sure you've heard about. A lot of people got caught into, wow, this is amazing. How do I invest in this? And OpenAI itself opened up their book and made an investment round that was led by an investment into it by Microsoft, because Microsoft want to use their products to enhance their search engine that it's not doing great, right? Compared to Google. Google responded that they're gonna do the same. They're gonna enhance their search functionalities with AI. So investors had the chance to invest into OpenAI like we did, and at the same time, this sparked a lot of interest in the sector as a whole. And in fact, we ended up increasing our exposure to artificial intelligence and machine learning, also buying companies that have not been in the news flow at all, but that we, kind of dusted off and say, hey, this is a good case now that there is interest and there is this momentum going. So that's absolutely the most, the hottest sector at the moment, artificial intelligence.
Thank you. So you wanted to touch on the tax equivalent yield. There is, I think, maybe a lot of questions coming up for that, like the sales charges for funds and those that are always tested. So yeah, feel free to fill us in on that.
Yeah, no, the reason I want to touch on this is because what I did, I went through the material and I kind of went like, gosh, what is it that really is always tested by the NASA people and the FINRA people, the ones who run the exam. And one thing that is really interesting and that they want you to know is this tax equivalent yield. The tax equivalent yield, it's a formula that allows you to compare the yield of a bond that has a privileged tax rate versus a bond that has a normal tax rate. Because what happens? There is a kind of bond in the United States called municipal bond. That bond has pays less taxes, and therefore the people who issue the bond, so the municipalities, they issue at a lower interest rate. So if an equivalent bond pays 3%, they're only going to pay you 2% because they know that you will pay less tax on that 2%. So in the end, when you compare the 2% with a lower tax and the 3% with a higher tax, chances are that this 2% is still going to be better for you. So there is a calculation to do that. And the calculation, for instance, I found it on the internet by just copying and pasting what I was saying before, tax equivalent yield, and posting it on Google. I found on the first search that came out is this one, where you can see, for instance, that if you have a municipal bond with a coupon of 3% and you are a taxpayer with a federal income tax rate of 10%, you need to find a bond that yields 3.3% before this bond becomes better than the 3%. And as you can see, that changes with your tax rate. So it is really important, and the exam will ask you the formula to calculate exactly what is the yield that you need to find in order to beat the tax-free yield. So bear in mind this for the exam, tax equivalent yield.
Great.
Then there's another couple of small bits that I really want you to focus on in this month. And one is these sales charges. They really want to make sure that you go out there as a registered representative, and you don't screw people, and you can advise people on paying the right commission for buying mutual funds. As you can see, the open-end fund, so the usual mutual fund, has quite a high initial charge of up to 8.5. So no one can charge more than that. Thanks God. You understand that, Ari? It means that if you put 100,000 into a fund, only 91.5 will go into your investment. The rest goes to the people who sold you the fund. So it's quite naughty. It's quite big. So bear in mind this maximum here. The other thing that the regulator has done has made sure that either you go and get this amount of money from what people invest at the beginning, so the POP, or you can also charge something different that is called 12B1 fees, this one here, which is basically the management fee. And the management fee is also regulated. It can only be a maximum of 0.75% of net assets. This is because they don't want people to first get 8.5% at the beginning of your investment and then you charging 2 or 3% during the life of the investment. You need to decide what you do. And there's another little bit here that they like to ask, and is that in order to call yourself a no-load fund, your 12B1 fee has to be maximum 25 basis point or 0.25%. Okay, so this bit is important. And then there was maybe just one more small thing I'd like you to focus on, and that is to understand these 4 definitions for an insurance product. Insurance products are quite tested. There is always like 5-6 questions on insurance product. If you master these definitions well, understanding what is a universal and what is a variable life, a whole life, I think you can get yourself out of a lot of problems. So these are the three main takeaways that I would take from the material of the month of February.
Yeah, great. That insurance sector comes up in lesson 7, right before the alternative investments. So that's helpful. Good. Thank you. So thanks so much for joining me this evening, and I look forward to getting through month 2.
Thank you. Take the quizzes. Goodbye.
Goodbye.